wherever you can help the buyer, it's certainly going to help you out in making the sale. If you can be flexible, and you have to know your flexibilities too, working with the bank, it's certainly going to improve your chances.
On the working capital side, small businesses have restricted access to capital. They need secured lending. If they have a secured line of credit, once they start exporting, obviously they're going to need to overcome the restriction on the borrowing base. So, yes, it's very important to find a lender that works either with SBA's guarantee program or with ours. And then, lastly, sometimes the buyer actually needs a funded loan rather than open account terms. We can bridge that gap if in order to seal the deal, there's a need for a long-term loan at low-interest dollar rates or euro rates, because in an emerging market without a developed capital market or a high interest rate in local currency, there's an inability to finance the purchase of the U.S. goods.
From a credit insurance point of view, the primary determinant of getting a credit approved would be financial information on the buyer. So the more financial information we can get on the buyer, whether it be trade references or financial statements, will assist in the ability to get credit approved. When credit is approved, that translates into more borrowing capacity.
Well, I'm seeing quite a large uptick in China, that's for sure. And one targeted area that has been sort of a location that I've been looking at keenly is Africa. There's been all kinds of studies about where global trade is going, and those two areas stick out, China and Africa, as over the next 20 years growing in leaps and bounds. And that's not just necessarily from the U.S., but certainly it would be from the U.S. also. It's just exploding as far as needing goods, and I would set my sights there.
We've identified 9 different countries that are as being of particular promise in the coming months and years. Brazil, Colombia, Mexico, Turkey, South Africa, Nigeria, India, Indonesia, and Vietnam. Among those, we found in the last year or two the ones with the most, the greatest growth in terms of our transactions: Colombia, India, South Africa, and Turkey. Huge increases in the authorizations that we've done for exporters on behalf of those countries, and within those countries, the sectors that have been seeing the most promise and the most growth are construction equipment, power generation, renewable energy, agribusiness, medical equipment, and avionics. And we see a big push ahead just generally for infrastructure in emerging markets.
Exports is growing much quicker and a much higher percentage than sales to domestic buyers. It's tougher to break into domestic customers because of competitive issues, and sometimes that relates into a tighter profit margin. So it's tough to grow your business safely going domestic. Whereas export, many times you're able to get a better profit margin, a better spread, and are able to go export. Several years back, a very high percentage of my portfolio was domestic sales and not so much on export. I would say in the last 5 years it's flip-flopped tremendously, where a higher percentage now of my portfolio are sales made to export buyers than domestic buyers. And of that, not only to the countries that Bruce just mentioned and what Mike has mentioned, but I'm seeing a lot of my clients selling more into China. The fear that we had of selling into China 5 or 10 years ago has been greatly reduced, and there's more activity in selling into China.